then you need to talk about life insurance. And in other word, it is also called term insurance. Okay. Let us understand how does it works. Okay. So the under risk management, the first thing, how many of you have life insurance, especially term insurance? Type TI in the comment box. If you already have a term insurance, type TI in the comment box. Okay, type TI in the comment box if you already have a term insurance. Okay, I think nobody has it. Okay, Vivek Agarwal has a TI. Okay, so Uma has term insurance. Okay, so let's understand how many of you have that confusion that how much to have a term policy, a life insurance in your life, right? So let us understand that buying guide for a term policy. Okay, so we are going to calculate how much life insurance, how much coverage you need to have so that your dependents will not have any, your family, your spouse or kids or your father or mother, whoever in your family, close family, will not have a financial difficulty if you are unavailability to us, right? So number one, the step number one is if you are going for a life insurance. When I say I'll be using life insurance, I am specifically meaning to term insurance. Okay. First and foremost step you need to do is like you need to do a full medical body. You need to do a full body medical checkup. Full body medical checkup. You need to do it. Okay. So that is step number one. Next, step number two, you need to calculate how much coverage you require. And this is the formula for it. Okay, so this is the formula for how much coverage it is required. Okay, so fire number plus major expenses plus major liability minus liquid net worth. Okay, so let us do it with an example. Okay, so let us do it with an example. So there is no Excel sheet for this. Okay, so I will just show you with one Excel sheet with live calculation here. Okay, so there is no Excel sheet on this, but I'll just you need to do it on your own. Okay, so what is that thing? So fire number plus major expenses plus major liabilities minus liquid net. So fire number, but here, okay, so let me just type fire number, major expenses, major liabilities, and liquid net worth. Okay, so this is what the thing. Okay, so the fire number, whatever we have learned yesterday, right? There is a bit more work on that when we are when we are calculating the term insurance aspect or life insurance aspect. Okay, so how many of you understood yesterday how to calculate your fire number? Type fire in the comment box if you understood that aspect, right? Okay, so under that, something we have found out called lean fire. Okay, lean fire we have understood. Okay, so lean fire, for example, lean fire is what based on the inflation adjusted expense. Your inflation adjusted expenses is around 13 lakh per year. Okay, so 13 lakh per year. Okay, then you multiply 13 lakh with number 20. Okay, 20. So that means 2.6 crore is your lean fire. Okay, so if you are calculating the life insurance coverage, you take lean fire number, you take this lean fire number, and there is something important you need to do. You need to understand right now. You calculated lean fire number. Till here, everybody is clear. Type clear in the comment box if till here everybody is clear. Okay. So if you don't understand how to calculate your lean fire number, watch yesterday's thing, right? So lean fire number. So next you need to understand, you need to calculate, find out how many people are dependent on you. How many people are dependent on you is what you need to understand first. Right? Once you calculated your fire number, how many people are dependent on you? Okay. So for example, there are three people dependent on me. Okay, except you. Okay, except you. Don't consider yourself. Okay, so because life insurance, if life insurance is taken for something that if the policy holder's unavailability should not impact financially to our dependents. Okay, so we will not be there. The policy holder will not be there. So don't consider the policy holder. Don't consider only the dependents. What you will do, you will divide your 2,60,000 to 2.6 crore with how number of dependents. So this is what the fire number for calculation of life insurance. Okay, calculation of life insurance. Okay, so this is what the number. So this is first thing, fire number. Okay, so everybody clear fire number type clear in the comment box. Everybody clear fire number clear in the comment box. Okay, so Mavlong is clear. Okay, so let's understand the other aspect. So major expenses, it is clear. So major expenses means when we say major expenses, right? There are future expenses when we have done our goal setting. There might be what is your future expenses. That is in major expenses what if your kid marriage, if your kids are not got married, your kids marriage, then if your kids are not getting educated, not got educated, that is their graduation, post graduation is not taken care, that part. Then if you don't have a house and if you want to purchase a house or build a house, that how much money required for that house, that part, everything will call as a major expenses. It is not and in your daily expenses is what is a major aspect of it. Like for example, you are in a rented house and the rent is a major expenses, then rent also comes under this aspect, right? So you calculate that number, you add major expenses here. So I'll just consider on an yearly basis, you need to add yearly basis. Okay, so I will just add how much major expenses it will, all the major expenses. After that, I will just add around 50 lakhs. 50 lakhs is the major expenses which I have with considering the kids' education, kids' marriage, and every aspect of it. Okay, so that's what the major expenses. Okay, everybody clear about major expenses? Okay. So why we divided by three? Okay, good. Thank you, Shivamani, for answering that question. Okay. So so major expenses. Everybody clear? Type ME in the comment box if everybody is clear on the major expenses. Type clear. Okay, so major expenses is clear. So now let's understand about major liabilities. What is major liabilities? Any loans, if you have like any loans, if you have any loans which has a tenure of more than 5 years, which has a tenure of more than 5 years, that's called major liabilities. Most probably, most of the thing comes under your home loan. If you have any home loan, and if you have any mortgage loan, if you have any car loan, which is if you have any vehicle loan which has more than 5 years, that is also come under this aspect. Okay, so these are the liabilities, loans. You will type in you will mention the outstanding amount when you are taking a loan, that what is that outstanding amount of those loans, you will type it here. Okay, so I'll just consider around right now it is 75 lakhs rupees. Okay, so that is around 75 lakhs rupees, I'll just consider. So 75 lakhs, including mortgage loan or home loan, everything, that is this much is my major liability. Everybody clear about major liabilities? Type ML in the comment box if everybody clear about major liabilities. Okay, so that is what major liability is all about. Super. Let's understand about now. You have something called liquid net worth. So before we understanding about net worth, what liquid net worth? Let's understand what is the meaning of net worth. Okay, net worth is, as I told you. Okay, so net worth is something that, okay, so net worth. It is asset minus liabilities. Okay, so assets are something which brings money into our pocket. Liabilities are something which takes money out of your pocket. So you subtract the number of how much, whatever the money you have in liabilities, outstanding liabilities, with asset, that the difference between asset and liabilities is called net worth. And what is the liquid net worth? Out of that net worth, from the asset minus liability is a net worth. Out of that, how much money you can quickly convert as a cash, right? Quickly convert as a cash. In other words, normally all of your investment, for example, you investing in equity, mutual funds, or any of the small savings or fixed deposit, or your provident fund, or any of these things, right? It can be converted easily into cash, right? And whereas other things, your real estate, if you have a property, if you have a gold jewelry is also not an liquid asset. Okay, if you have a property, any real estate, if you have a house, all of these things you cannot immediately convert as a cash. Okay, so those things, how much out of that? For example, your asset is 1 crore. Okay, so your asset is 1 crore, and you are let me just put that thing for you. Okay, and your liabilities is 75 lakhs. Okay, so only home loan you have it. So that means, here, if you have it, that means 25 lakh is your 25 lakh is your this one, right? So 25, definitely it is not 25, because 75 lakhs liabilities is, that means if you have a 75 lakhs liability, your home might definitely not be 1 crore. It be more than 1 crore. Okay, so asset should be more than 1 crore. Otherwise, you will not get that much loan, right? So let's consider this as a 2 crore. Okay, so consider this as a 2 crore. So 1 crore, 25 lakhs. So out of that, how much you can convert cash easily? Let's consider around 50 lakh you can convert easily. Okay, so 50 lakh you can convert easily. So that 50 lakh is your liquid net worth. Everybody clear about liquid net worth? If it is clear, type L and W in the comment box. Money which we can withdraw, right? In other words, that's what liquid net worth is all about. Type L and W. Type L and W if liquid net worth is clear for everyone. Super. So this is how it get calculated. And now everything is in front of you, right? Now everything is in front of you. What is the formula? Fire number, we have it, plus major expenses, we have it, plus major liabilities, we have it, so minus liquid net worth. Let's put that in here. Okay, so your fire number plus major expenses plus major liabilities minus liquid net worth. And this is whatever the number you are getting, that's the coverage, minimum insurance coverage you need to. That is 1 crore 61 lakh, 1.6 crore, in other words. Right? This is what the insurance coverage you need to have. If you got the clarity, and if it is mind blown, type MB in the comment box. No confusion, nothing. Okay, so no confusion, nothing. So this is how you calculate your coverage. A lot of people say that, okay, so what is your age? 40. Okay, so now what is your current income? Based on your current income, they just multiply with the 20, one number, 20 or 15, and they just say this is what your, this one, right? So actual calculation is whatever I have showed right now, right? This is how much you need to have the life insurance, right? Everybody got a clarity? Type clear in the comment box if it is clear for you. Okay, so now the step number two is clear. Once you got how much coverage is required, and step number three, if you got it, you can go use this particular platform. Okay, so normally this you can you can use this calculator also, but I would recommend to use that formula itself. Okay, so whatever the formula I said, it has been every industry or every insurance company is using that formula, right? They understand all of that aspect through your PAN number. Okay, so and they ask few of the things also, right? Through that they calculate and then they give you the quotation or whatever the how much number you can have all of the things, right? And you can use this also, this particular thing where you will learn a lot. That is where it will tell you what needs to be understood and what is the best term plans and you can compare the term policies, all these things. Okay, so I'm just giving this link here. Okay, okay, Sandeep Sanaf, my PF is about 1 crore. Should I count? Yes, you need to. Okay, so here is a link. Okay, so you can use this link. You can just bookmark it, and you can use it for further your analysis, right? So this is what the step number three. You can use that, find out which company is giving you best insurance through coverage, best premium rate, and you can use this and use this from this particular website. You can find out, and you can add the required riders and add-ons. Right, riders and add-ons gives you the extra benefit. For example, if some accident things happens, you want uh, your dependent should not get any financial problem. So then you can add a accidental rider, right? Accident policy rider. Then you can, if something happens and because of that disability happens, then again the permanent disability or disability rider also you can add on, right? So add a required riders and add-ons. Then, last but not least, once you do that, then you shortlist and schedule a call with insurance expert. And this is how you actually purchase a life insurance. Everybody clear about life insurance, how to purchase or how to buy? Type LIC in the comment box. Life insurance clarity, right? Life insurance clarity. So this is how you calculate the life insurance. Okay. So now that you have understood about the life insurance, right? So let's understand about health insurance. While we talk about health insurance, no, as I told you, whether your company has it or somebody else has it, always have your own health insurance. And how many of you have a confusion that how much to have a health insurance, like me in the comments? Okay. Now let's understand. There is no calculation to understand this health insurance. It's a very straightforward. It is purely based on which state or which location you are there, right? So if you look at it, health insurance. Okay, if you look at health insurance, it is purely based on the what where you are living. Okay, so based on the location. So number one is a zone one. If you staying somewhere in Delhi, when I say Delhi, complete Delhi and and Mumbai, right? So these are the very costliest cities in India. Okay, so if you're staying in any of these cities, zone one, individual cover itself you need to have 10 to 15, minimum 10 lakh, and you can go up to 15 lakhs. Okay, irrespective of your health is good or bad. Okay, so family floater, if you're thinking about minimum 10 or you can go up to 20. Okay, so 10 to 15 you can go up to. And if you are taking health insurance for senior citizen, minimum 20, you can go up to 30 lakhs. Why? Because the cost of medical aspect in this location is a very, very, very high. Okay, so that's why you need to have this much of health coverage. And if you're living in zone two, right? Any metro cities except Delhi and Mumbai. or any tier 2 cities, like very important cities, right? So Hyderabad, Bangalore, Secunderabad, Kolkata, Ahmedabad, Chennai, Pune, or any these kind of cities, right? So in zone two, then individual cover minimum should be 5 lakh, and you can have go up to 10 lakh. And if it is family floater, minimum should be 8 lakhs. You can go up to 10 to even you can go up to 10 to 12 lakhs. And senior citizens should be minimum 15 lakhs, go up to 20 lakhs. Okay. And other than this, any rest of any other any town or any cities or tier 3 cities or any town or any small cities or any village, minimum you need to have for an individual coverage you need to have 3 lakhs, and family floater you need to have around 5 to 7 lakhs. Senior citizen you need to have 10 lakhs. At any given point of time, remember, you need to have minimum 3 lakhs sum assured of health insurance. Everybody clear about health insurance? Okay. We can take, can top up, select. What if 5 lakh mediclaim taken and top up 10 lakh taken? Okay, so what if 5 lakh mediclaim taken, top up 10 lakh is taken? So then, then you need to either you need to increase the uh, sum assured, or after that you will not be able to, right? So both the top up and after actual sum assured and top up both have been taken, claimed, then on top of that you will not get anything else, right? So this is how the health insurance aspect. Okay, so everybody clear about health insurance? Okay, so okay. So we got about insurance aspect, life insurance and health insurance, right? The one most important is an emergency fund. Okay, so what is the meaning of emergency fund? When you say emergency fund, it doesn't mean that I'm not only specifying that emergency fund means you are talking about only health emergency or nothing. Emergency means any one time expenses, any one time expenses whichever you are doing it, so that comes under emergency fund. Okay, so let's understand about emergency fund a bit more. Okay. So, what is that emergency fund? We know a lot of questions might be how much to have emergency fund. Okay. So, if you go anywhere outside, people will say emergency fund you need to have based on this much of the expenses, right? So, what we have learned on the first day, we have to keep our root strong. What is the root? Income, right? And anybody, if you ask me how much to be emergency fund should be based on your income. It is not based on your expenses. Okay. So remember, if you're talking about emergency fund, you need to be talking in terms of your income. How much? If you are working professional, WP stands for working professional, and you are a single, minimum 5 to 6 months of income. Okay. If you are a working professional, married, and if you have even kids, okay, married with kids, just married, minimum you need to have 6 to 9 months of income. Okay. And if you are a business manager, that means if you are a business managing person, you have your own business, you need to at least have a 10 to 12 months of income. Okay, at least 1 year income, you need to have an emergency fund. This is the answer for how much to have emergency fund. Everybody clear how much to have emergency fund? Okay, so now you might think that okay, so this is huge amount of money. How much I know? What is a way of keeping it? Okay, so this is a standard way to keep your emergency fund. 15 to 20% is in cash. Okay, 15 to 20% is in cash. Okay, so that is in terms of cash. If something happens where you cannot you use your UPI or swipe your debit card, right? They specifically tell you to pay the money hard cash. So that's where it helps you. That 15 to 20% of whatever the amount comes in, it has to be cash. 40% of the amount should be in savings account. Okay, in your savings account. What happens? You can swipe your debit card, or you can withdraw money from your ATM card by going to ATM, and you can swap. You can withdraw the money from ATM machine, and or you can use the UPI also. And next 40% is in liquid mutual fund. You take any liquid mutual fund, you can use that, right? Liquid mutual fund is a type of fund, okay, so where you can invest anytime, you can invest anytime, you can withdraw anytime, okay. So why we can, people might ask, we can invest in FD, any deposit, right? Recurring deposit or fixed deposit. But it is limited. There is a lock-in period for 6 months, 1 year, right? If you withdraw that amount of money, what happens if some that money is required within that time gap? You have to break that deposit. And if you break that deposit, there will be penalty. And if you that penalty, whatever that interest you get, that will go for penalty, right? Instead of that, if you invest on liquid mutual fund, there is no penalty over there. How much ever time you have invested over there, if it is 10 days, if it is if it is 6 months, you will get that amount of that much amount of interest, and you can take that amount of money without having any charge, any penalty, right? So that is what 40% on liquid mutual fund. This is the standard way to keep the fund. Everybody clear about how to keep the fund? Type clear in the comment box. If it is everything clear about emergency fund, type clear in the comment box. Okay, superb. So next, let's understand about next aspect. So now that we have understood about all the aspect of risk management, right? So let me tell you, these two is a very, very important aspect. First, you need to understand your financial position. Next, you need to take care of your risk in terms of having an emergency fund and having an insurance. Very, very important. If you don't take care of this, and if you plan all of this, all other things, you are going to fail in your financial journey. You are going to fail in your financial journey. Once you have taken care of all of these things, next aspect comes under is a wealth accumulation. In that wealth accumulation, we already spoke about short-term investment, long-term investment. Okay. Now, next is a debt planning. Okay. So the debt planning, that means how much to have loan and how to reduce loan. A lot of people might have that questions, right? And that's where I have built one Excel sheet for that, right? So let me share that Excel sheet with you. Okay, super. So this is the Excel sheet. Okay, Karthik, what is a debt investment? I'm not talking about investment right now. Okay, so Karthik, debt investment, I already told when we talk about in the first aspect of the session. Okay, so we will answer that question at the end of this session. Okay, so now we are going to talk about loans. When we are accumulating wealth, right? We might have something to plan, something called loans. You might have borrowed any liabilities, right? So that is called debt planning. You have borrowed any loans, you need to plan, or you need to reduce. How you need to reduce, how you need to come out of that is what we are going to talk here. Okay. So first and foremost thing that who have bought the loans. You have bought the loans, right? You know what purpose you have bought the loans. The first and foremost thing you need to understand is you need to understand why have brought that loan. And for that, you need to write it down. What are the loans you have it? You need to have a list of loans in your hand. Under that, what is that you need to type? What type of loan you have? What is the current balance, outstanding balance? What is the interest rate you are paying? How much is the EMI which you are paying monthly? And any other things which you want to write it down, you can write it down. Okay. So once you have the loan, all the loan listed out here, and you know which loan purchased when, you know how much you are paying interest, everything is clear. At least if you write it down, all the list it down, everybody clear about those loan. Now that at least you get a clarity, okay, this is what I have a loans, right? That is a first and foremost important aspect that you need to do. If you don't do this activity, let me tell you, even God will not be able to help you to come out of loan or come out of any debts. Okay. So once you write down all of that loans, you will understand how much money goes. Okay. So, and this will even gives you the, as I told you, my way of looking at as a cash flow, right? And this will also tell you, if you have multiple loans, all these things will come under here. And based on that, it will, you will get how much money it is, how much loan, and by when your loan will get ended, right? All of these things will pop up here. So now you have few strategies. Okay, you have few strategies to come out of debt or reduce your debt. Number one is, number one, we call it as a whether you have money or not. If you have money, there are two strategies. Under that, snowball strategy. Type snowball in the comment box. What is the snowball? Once you write down all the list of loans, snowball strategy says, first and foremost, you try to finish lowest balance first. Whichever the balance is the low for you, that balance you will try to close the loan early, as soon as possible. That's what the snowball strategy talks about. Everybody clear about it? Okay, that's what snowball. And that means what you will do if you have money, right? If you have extra amount of money, that extra amount of money you will try to put into the loans which has the lowest balance. Okay, so now the second strategy is avalanche strategy, right? Avalanche strategy says you will try to focus. If you have extra amount of money, you try to try to focus and close highest interest rate first, and you have all the data here mentioned out here. You will, once you list out all these things, and if you have extra amount of money, you will focus highest interest rate first, right? You will focus highest interest rate first, and whatever the extra amount of money you will pay to the highest interest rate loan. You will pay an extra EMI, or every month you pay extra amount in that, so that it will get closed earlier. That is what you, if you have highest, if you have a extra amount of money with you, right? And what if extra, people might tell you, I don't, I'm here because I don't have extra money. I'm paying EMIs more than my income, right? So another strategy for in that level, consolidation. Type CON in the comment box. So type CO in the comment box. CON stands for consolidation. By listing out all of that loans, you will understand what are the loans you have. Okay. So from that, you can consolidate, and you can go to any financial institution. You can take a consolidation. You can tell them that I have this much loan. I want to consolidate, and I want to keep it at one institution or one bank, right? So that is called consolidation of loan, right? So these are the strategies are available. So these are the very important. And even if that doesn't work, then you need to liquidate, you need to liquefy your what are the asset. Based on the what asset you have, you need to convert that asset into a money and then pay back this loan. These are the four strategies what we can tell upfront, right? Everybody clear about how to, what kind of strategies are available, and now you can go use this sheet, list out all of your loans, find out if you have extra money, you can find out here, you can put You can put here additional amount. You can put here additional amount and find out when you can close your loans. Okay. And if you don't have extra amount of money, see how you can consolidate it. That is how you need to find out this, right? So this is how you can reduce, or this is how you can plan your debt. Okay. So this is what comes under wealth accumulation. This is how it comes under wealth accumulation. And once you start accumulating your wealth, then you need to plan about your tax planning also, right? Tax planning also. Under tax planning, the most important aspect we need to understand is first one is Section 80C. And government aid, every section, every tax deduction government has given has a meaning. Okay, every deduction government has a meaning to it. Section 80C, if you look at it, it is purely to take care of ourselves, our family. Okay, to take anything that mainly it takes care of ourselves by putting into provident fund to take care of our retirement. Then it takes care of our insurance aspect, premium, insurance premium, right? Up to 1.5 lakh you can claim from that under 80C. And there is another section called 80CCD, which is a part of 80C. You can claim another 50,000 on top of 1 lakh 50,000 if you invest on NPS, National Pension Scheme, right? If you invest, you can claim another 50,000 rupees. Total 2 lakh rupees. Okay. So next is section 80D that talks about health insurance premium. If you avail health insurance, whatever the premium you are paying for it, out, up to 25,000 rupees, you can claim it. Okay. So that's around 25,000. So around 2 lakh, 25,000 rupees comes. Okay. So section 80G, 80G is a donation, right? You can donate to any NGOs, any causes, or any of the political parties, or any national any causes in terms, like for example, Prime Minister Relief Fund, any relief funds. Okay, government relief funds. You get for anything related to government thing, you get 100% tax deduction. That means if you invested one lakh rupees, entire 1 lakh will be deducted from your taxable income. And if you invest in any NGOs, that is again listed NGOs, not every NGOs. Any listed NGOs or any cause, you get 50% of tax benefit. That means if you donated 1 lakh rupees, 50%, 50,000, you can claim a tax benefit. Okay, so that is what section 80G. And there is something called section, which is not mentioned over here, where section 24, that is your home loan. If you have a home loan, you can claim 2 lakh interest, whatever out of that interest payment, you can get 2 lakh tax deduction in a year. Okay, so total how much? Okay, let me just show you in an example. Okay, 80C is 1,50,000 rupees. Okay, so 1,50,000 rupees is 80C. 80CCD is another 50,000 rupees. And next is 80D. You can claim up to 25,000 rupees. And it's the 80D. If you are investing, if you are taking an insurance for your parents who are more than 60 years old, then you can claim another 50,000 rupees. Okay, another 50,000. So total 75,000 you can claim up to. Okay, so not direct, up to. Okay, so the what is the different direct and up to? Up to means whatever that amount, whatever the premium amount, you can claim that amount. If it is below 50,000, you can claim completely. If it is more than 50,000, up to 50,000, you can claim. That is like 80D over 80. Then the section 24, if you can say that, that is 2 lakh rupees. Okay, so 2 lakh rupees. And section 10, for whatever that interest rate you get from your savings account, up to 10,000 rupees you can save it. And you get a standard deduction, irrespective of anything. Government gives you, take 50,000 benefit just like that. Okay, 50,000 benefit. Okay, on any given aspect, you will get 4 lakh 85 to, and if I haven't considered 80G. Okay, 80G, if I consider, if you do around 25, 25,000, not even 25, 15,000. So on and around 5 lakh rupees, you can get a tax bill. And if you don't have if you don't have a home loan, then you can get up to 3 lakhs. Okay, everybody clear about tax planning? So you can plan according to your income on this aspect. Okay, so this is about tax planning. And once you tax plan, and similar simultaneously you do retirement planning. I already told, we already spoke about retirement planning, right? So we talk only about, in India, most of the people talk only about till here. And our planning of financial freedom, or planning you becoming wealthy, will also have one more important aspect, is the estate plan. That means you created everything. What next? Once you created everything, you also need to have what's next. How you are planning to distribute your wealth, and how, if you are building any multiple, how are you going to continue that aspect? And how is that you are going to transfer your values to your next generation, right? And all of that things comes under estate plan, right? So this is what the complete plan of financial planning in a nutshell. If it is clear for you, type clear in the comment box. Okay, so if it is clear for you, type clear in the comment box. Okay, so this is what the plan for you, for the entire financial plan. Okay, so see, what happens is, we learned a lot of things. We have learned from, in day three, right? We have learned about asset, we learned about financial planning, we learned about how much you need to have, what kind of asset allocation you need to have. Still, people lose things. Still, people are not able to do, and still, people are not able to become wealthy, or still, people are not able to get achieved in terms of their financial freedom. Okay, so why? There is something called some kind of rules, or drivers of investment performance. Why? Because everybody is looking at from the top down approach. That is top down approach, rather than, instead of looking at bottom up approach. Always look at bottom up approach. What we are doing, you can even relate it. Everybody, even if I ask you to today, if I ask you to invest, you will say, now market timing is not good. I don't have money. That these things, all things will come. And based on when you have it, then you will select, okay, this I will select a bank deposit. I will select, okay, today I will go to this mutual fund, and today I'll go to this company, right? So based on that, you will select asset, and then you talk about how much allocation, all of that things. Actually, if you want to be in the financial freedom journey, or you want to become well, you first think about what is your goal and what should be my asset allocation. And once you have a clarity about this much is my asset allocation, this much percentage of money should go to equity, this much percentage of money should go to my provident fund, this much money should go to my pension fund, this much money should go to my mutual fund. All of this asset allocation, this much money I should invest in gold. This asset allocation is a clear. And then you select asset from that, whatever the asset, whatever we have learned. And then, this will automatically taken care. Market timing will automatically taken care, right? So this is how it works. And this is what the rule, and this is what the drivers which will drive you in when you are in the financial freedom journey, right? So this is what we have already learned. Okay, so So if it is clear about drivers, type clear in the comment box. And we have already learned about this aspect. And next, we are wealth accumulation. We are clear, right? And now we are coming to the end of things. Is